All right, welcome back. We've got a weekly stock market update for you. This week was headlined with NVIDIA earnings. If you want a deep dive on that, look at my recent video I uploaded. I have a deep dive into the earnings and what I'm doing with NVIDIA stock. But other than NVIDIA this week, we did have some strong performance in the indices. We've got the Dow Jones at an all-time high, and we've got a continued recovery in the Nasdaq and the S&P 500 from the beginning of the month. So we have closed the month of August and we are green. We've had a nice recovery from the August 5th meltdown flash crash that we had, and it's been just up and away. We talked about at the beginning of the month how August with a election cycle tends to be green. Historically, 100% green in August. Now, unfortunately, that's not the case for September and October. Those are normally seasonally weak periods for the market, and especially when we have an election, because there's a lot of uncertainty as we get closer to the election. Now, definitely with the election currently, as it states with the polls and the betting markets, it's a 50-50 flip. So there's a lot of uncertainty. The market can't price in any certainty of one side or another winning. And I think the longer we have that uncertainty, the more you could see volatility in the markets, especially with the seasonally weak periods of September and October. So keep that in mind with these next couple of months as we head into the election cycle. Now, for me, I embrace volatility. I do not shy away from it. It's very exciting for me and stimulating, because when we have volatility, that means misprice in assets, and that gives me opportunity to go buy things that I want to buy at a discount. So I will be ready for that. And when we do our portfolio, we're going to do a portfolio reveal at the end of the video. I'll kind of give you guys my game plan. But for the rest of the news, we did have GDP numbers come in, and we have a steady growth of 2.8% for quarter two of 2024. And we did see a little better jobs number this month than what we've seen in the past. Now, again, these jobs numbers, I don't think I got to it in the last market update. Last week, they did have a huge revision to the jobs numbers. They miscalculated by almost 1 million jobs. So the problem I have with the GDP data, the jobs data, the CPI data, is we are calculating them in a very inefficient manner. With all the technology we have now, there's a lot better ways that we can gather this data and have the data be live. We release these numbers and a month goes by and then we revise those numbers. Those numbers were incorrect that we put out a month ago. Those jobs numbers that we said we gained 500,000 jobs, we actually lost 100,000 jobs. So we've seen that all these last couple of years where the data comes out and then it's actually incorrect. So they have to revise the data. But no one talks about the revision. They talk about the headline when it is released. So same thing with the GDP. We're growing at 2.8% supposedly for quarter two. But these numbers are just, they're very backwards looking. So we're looking at what's going forward. And unfortunately, this is the data the Fed looks at. They're looking in the rear view mirror. And that is the big gripe I have with a lot of these economic numbers. It's good to see where we've been, but it doesn't have any indication of where we're headed. It just told us what we just had, and then on top of that, the numbers are typically revised one way or another, so they're very inaccurate. So that is my little gripe on the economic data here. And as far as globally, China is economic continued struggle in China. So they've been in a pretty deep hole, and it just keeps getting worse and worse. Some of the Chinese stocks got killed at the beginning of the week. I didn't get to see if they had a recovery, but I saw some of their big stocks were down 20-30%. So that's not good for them over there. So that's about it for the news. Let's look at the charts here. So as I mentioned, we've got the Dow Jones closed at an all-time high, which is really nice to see. We've got the S&P 500. Again, beginning of the month looked treacherous. Boom, bounced right back up, and we are 1% away from an all-time high in the S&P. Now the Nasdaq, we are still about 7% away. But as I had here on my little squiggly in the S&P 500, it wouldn't surprise me if we see us peak over the all-time highs. Again, this is my crystal ball. I have no clue. This is just my guess of what could be coming towards us. But I do see a little more momentum to push up, and then we get into the seasonally weak period. We have a pullback, and then we get certainty in the election, and then we move back up. So we are going to get a lot of headlines. There's going to be a lot of news. There's going to be a lot of uncertainty, depending on how you feel politically and all of those things, how your job status is, what sector of the economy you're working in. There's going to be a lot of headlines, but just look at this chart. Stay invested is the bottom line of these charts. Don't get shaken out because you have fear of one party or one governor or one policy, whatever. Stick to the program. Have your plan and stick to it. Don't get moved around by headlines and short-term news blips that come and go. So I don't have the chart here. I wish I did. I'll pull it up in another. I'll do a election cycle video in the next few weeks to kind of go over some thoughts. But there's going to be a lot of, what about this policy? What about that? What about this person? What about that? Focus on your businesses. Focus on your plan. Focus on yourself. I'm not a political person. It's important to go out and vote and be informed. But when it comes to investing, I think people, unless you're a trader and you're looking to swing trade something for a short period of time, focus on your time horizon and focus on executing your plan when it comes to your portfolio and your goals and all that. So that's my little rant on the election and the seasonal weak period that we're going into. As I said, I embrace the volatility. I look forward to it. So I'm not worried about it. With all that being said, we are in a little bit of a tricky period in the market because we are seeing some softness in the jobs numbers. We are seeing inflation cool, which inflation is cooling for many reasons, but one of them is softness in the consumer. So I can rattle on 100 things on how the economy looks like we are either in a recession or going towards a recession. I don't think it's going to be some Great Depression, and it won't be because the Federal Reserve is there to bail us out whenever they see some real weakness. That is the plus to the Fed, is that we won't have great depressions like we had in the 30s because there wasn't a Federal Reserve there to smooth things out. So we see a lot smoother economy because of the current system that we have, and there's downsides to that, like your eggs costing a lot more because they flooded the money, the market with all this stimulus, all this money. They're just printing dollars, so things go up in price. But what also goes up in price is your assets. So again, stay invested. But we are in a little bit of a tricky spot here because we are going to get interest rates that are going to start to come down, and that will stimulate growth in the economy, but it's not going to happen instantly. So it's going to take a while for the market and consumers to be able to feel comfortable buying large assets and doing real estate deals, and what lower interest rates will bring, the benefits of lower interest rates. It's going to take some time for that to work through the economy. And so there could be a brief period of time where we have a recession, we have some weakness, we have depressed asset prices, and it's going to take some time for the stimulus of lower rates to work its way into the market. So wouldn't surprise me if you see the opportunity to scoop up some stocks at a good price. So for me personally, let's take a look at my portfolio. I'm very concentrated at the moment. I've gotten rid of a few positions and I've raised a little bit of cash. So this is my total asset spread amongst multiple portfolios that I own and I help manage. Now, everyone in this basket has a 10-year time horizon plus. So you can see I'm aggressive in technology, I'm aggressive in growth stocks, and I'm concentrated. But what's my main point of showing you this is that I've gotten more concentrated and I've raised a little bit of cash for the possibility of the seasonal weakness, the election fears, the economy softening up. There just seems to be the risk reward for me to be 100% fully invested doesn't make a lot of sense. If you are a set it and forget it investor, keep plowing money in. And I'm going to keep putting money into my account and building my cash position, but I do see a possibility for there to be some good opportunities to scoop up some stocks. And also for me personally, I've mentioned 1,000 times, I'm using that cash as collateral to sell puts on stocks I want to buy, like NVIDIA. So eventually you'll see NVIDIA on this sheet here when I get assigned. I haven't currently been assigned. Now, I recently did do a large purchase in Amazon, and I will continue to dollar cost average in Amazon, especially as we're under 200 bucks. And I've been buying a lot of Google. Now, the SMH and the triple Qs, I will dollar cost average when the market has severe weakness, like we saw earlier this month. We skyrocketed off of that, so I don't buy when we are in extreme green. I buy when we're at extreme red. So that is what I do for the SMH and the Qs. But right now, Google and Amazon seem like a great price for their fundamentals. Now, it could get worse if the market and the economy deteriorates. People need liquidity and they'll sell whatever asset they can. So we could see lower prices across the board on everything, even if it's a good asset. That's why I have cash ready to roll. I don't know when that time will be. Could be 3 months from now. Could be 3 hours from now. I don't know. So my point here is I'm got a little bit more concentrated. I got rid of a few positions like Enphase. I cleaned up some of my crypto stuff, and I cleaned up Apple. I got rid of a few positions where I liked them, but I didn't love them, and I wanted to add more of these other guys here. So I'd rather have a lot more Google and a lot more Amazon than Apple at the current price. I like Enphase, but I think there'll be another opportunity to get in there. And if it goes without me, I'm totally fine with that. So that is a little bit of update on my thoughts. And you know, I'm not your mama, I'm not your papa, I'm not your financial advisor. Read the disclaimer down below, get your own plan, think it through, and stick to it, as we're going to go through some more uncertainty and potentially softness in the market and seasonally weak periods. But that is all I got for you guys in this weekly update. Next week we do have a short week, so may not have a video next week because there may not be a whole lot to talk about. We are in the dog days of summer, so we're going to see some more action coming as the market heats up. This time of year, end of summer, a lot of people are on vacation, not a lot going on. This week we had NVIDIA earnings. So if I don't see you guys for a couple weeks, take care and enjoy the last few weeks of summer. That's all I got. Hey, go Seahawks. We got football coming up. That's all I got for you guys. All right. Peace out.